All right, hey there. Good morning, everybody. Chris Franks with Texas West Capital. It's about just a few minutes after 11 a.m. Central Standard Time here on what is it? Tuesday, the 25th of May, 2021, here in beautiful, beautiful Bernie, Texas. A bit overcast though. Don't forget, we've got here in the U.S. We've got a Memorial Day weekend coming up here. With what I've got going on with personal stuff that you guys know about, I think TWC may be just on skeleton crew basically from Friday through Monday. So we won't. You know what? It can be half a day Friday. I'll do this. I'll set the skeleton crew thing on about halfway in the day on Friday, and that way we can do this public live stream on Friday morning. And then, as everybody knows at TWC there, you've always got somebody around usually. It may take a little bit longer on the weekends or holiday weekends, but we generally have somebody around that can answer questions and whatnot. It's just usually I try to take off those weekends just because of, again, importance of family and everything. So anyway, that's what we got coming up there. Hope y'all are doing well. Just want to kind of give you a heads up on that. We'll go ahead and do the public live stream in the morning. We'll keep TWC. I'll have the office open half a day on Monday. Oh, I'm sorry, half a day on Friday, and then we'll be back Tuesday morning. And then that way, everybody's got everything, whatever. And like I said, during the weekend, we've usually got somebody there to. Usually it's Adam. He's such a great guy. That's able to answer questions or anything on the weekends. Like I said, it just may take a little bit longer to get back than normal. Hey there, Crypto Mowgli, Hank, Bill, what's going on, guys? Bianca showing up. Good to see you as always. Claudio here. Let me see, who else is here? Nevlusian. Pixifin checking in from a sunny Switzerland. Let's see here. Data, what's up, man? Guys, let me tell you guys real quick before we do anything, man. Y'all need to go over here to TX West Capital over here on Twitter and check out this video here. Our buddy Data, he's a member, put together this amazing video here. You guys need to see it, really. It is so cool. But check it out and then check out some of the other stuff he's got going on his YouTube page there. He said not to mention him, not to worry about it or whatever, but man, so talented, man. And I'm so excited to see what he put together there. And I think you guys will like it too. It's really catchy, really cool. So take a look, all right? Let me see here. Man, what's going on? Man, I cannot even, my eyes are just working terrible today. Does that say then? The Notorious. Oh, that's okay. Okay, I got you there. What's going on, man? Good to see you checking in. Sorry, my eyes are, they're just a little off today. It's a little bit harder to read the small print and sometimes with these backgrounds and whatnot. Hey there, TV Canal, Onyx King, good to see y'all. Budman here, he says 30,000 and 32K were beautifully done. Yeah, we're going to talk about that. Everybody's still very, very bearish right now. And we'll talk about what I'm looking at here in the charts going on with all that. But so far, doing all right. Hey there, Wind. Good to see you. ARM as well. Mark O'Sullivan, what's up, buddy? Good to see you here. Common Man says, how much hate will I receive if I suggest we're already in a crypto bear market? Oh, I think they're going to hate you, but everybody kind of thinking that already. But we'll look at the possibilities here today, as always, for sure. And then I'll expand a little bit on those very short macro distribution kind of ideas that I had last week at the end of the episode there. We'll talk about that a bit and kind of clue y'all in a bit more on all that. Hey there, Mark Kane, Crypto Girl. Good to see you guys. Lewis, checking in from Clearwater, Florida. I've been there. I've lived in Pensacola and Jacksonville for a while. So, no, I didn't know Scott Melker when I lived over there. I think he was living elsewhere at the time, though, probably. When I was living there. I don't know. We're about the same age. He's probably going to school down there in Gainesville or something in that area. Hey there, Michael. Hey, I appreciate you, buddy. Thank you so much. Armand's checking in. Yeah, nice to you here as well. Thank you, sir. I appreciate it. Cue the action as well, Block Tech. Good to see y'all guys here. Yeah, I lived in Florida for a few years when I was younger. Man, I've lived a lot of places, guys. Again, I've lived in Japan and Hawaii. Lived all over the U.S. So I've had my share of experiences, cultural and otherwise, throughout this great world we live in. The Notorious talking about Elon yesterday, sending the market back up. Guys, this is man, I've got such big ideas, and I don't know if y'all are really ready to hear them. I kind of hint about at them every few months or so. But I think things are happening in a way that goes contrary to what you first think when you first come into crypto. Again, I think people believe that Satoshi Nakamoto was this great believer in human freedom, and really believe that that this idea of the blockchain was going to free people. And as I've made a case for many times before, I think it's just the opposite. I don't think it's anybody with some grand thought like that. Again, guys, I think Alphabet Agency here in the U.S., I think it was created as a way to better track people. Remember, government's all about control, guys. And the blockchain gives them control, the ability to track where your money is going. I mean, at the end of the day, guys, that's exactly it. It's not anonymous. Everybody goes, oh, but using, this mixer and this coin and that coin are all anonymous. You know what? Even if they are at the moment, they won't remain that way. It never does, guys. Tor was meant to be anonymous. It is no longer anonymous. The boys up there in the Cambridge graduate studies computer security over there broke it down for the FBI so that they could do this worldwide child porn ring that they ended up breaking down and arresting a whole bunch of people with and whatever. I mean, anything you think is anonymous, the only thing that's even slightly anonymous is taking cash and giving it to somebody else. But depending on how much cash you pull out, I mean, especially here in the U.S., it's still going to be tracked. It's banks are required to report deposits and withdrawals of $10,000 or more. They're strongly encouraged to do it for $5,000 and more. So it's all about control, guys. And I think, honestly, blockchain was invented, this whole idea of blockchain, what's going on here, to just kind of supplant the fiat, the physical dollars, and move it all to electronic, and then you've got this better tracking mechanism, not just of U.S. residents, but throughout the world. If you want to track funds, that you label as terrorist funds or whatever, I mean, how much easier can you do it? So, yeah, I think that's kind of what it's all about. That doesn't mean you can't make a ton of money on it, but I think it definitely changes the narrative in a way that you need to be aware. And that's probably going to upset some of you guys. I know. I'm not here to upset you, but I'm also not here to kind of, coddle you and just, blow pixie dust and unicorn farts up your nose or whatever. I keep saying unicorn farts. Makes me laugh, that's why. So, I mean, if we view it in that way, it doesn't change your ability to make money with it, but I think you need to be aware just of what's going on generally in government and the populace and everything else that's going on there, guys. So, yeah. Thank you, CryptoGar. I appreciate you. Hey, Demas, what's going on, man? Yeah, you're very welcome. I've got greater thoughts. I've got bigger thoughts of how this all kind of comes together with a greater economic thought from probably, 2020, so probably about 90 or 100 years ago, and how this kind of fits into that bigger thought. But I'm not going to share it today. But yeah, there's this, and that would kind of also coincide with my idea of this being a alphabet agency kind of creation and all about, that whole government control and everything. I mean, he just really kind of fits in all there together, especially with the way that, government economists tend to fall into a certain thought type. So, and I may be wrong, but, at the end of the day, it's important to get out beyond what the initial, especially on something so new, to get out of that initial thought process of what everybody, kind of assumes it is. I think people get hurt more than anything because they believe that, Bitcoin and blockchain is this fight against tyrannical power and centralized power and whatnot. It levels the playing field between the haves and the have-nots. But as I've outlined before, again, I think, at the end of the day, what's ultimately going to happen, a couple of the have-nots or kind of haves are going to do well with it and make money and pull themselves up from where they are. But I think in general, I think the have-nots are just going to, or the haves are just going to increase their, what they have via the wealth transfer is going to come from your lower down to your higher up. It's just the nature of what that system, of what, the system is in the world, guys. And so, it's understanding what's going on. It's being positioned well when it happens, and then being able to take advantage of that. And unfortunately, a lot of have-nots or semi-haves don't really have a real grasp on the whole idea of wealth transfer and how it happens and how to make it happen for them in a positive way. And so, they tend to chase the short-term trades, and at the end of the day end up worse off, or at least where they started, or worse off usually, rather than better off. Now, like I said, that doesn't mean everybody, a lot of people, that don't have are going to make transformative wealth here. They're going to, they're going to become the haves. But in the grand scheme of things, most people will lose money in this. It's the same thing I've warned about for a couple years now. And it's just, it's shown by what happened here recently with all the deleveraging that went on here on that move down from the all-time high. How many people were liquidated? 800,000 accounts were liquidated, guys. That's crazy. Or I'm sorry, was it eight? Yeah, it was 800,000, I think. Anyway, huge bit of money, something like $3.5 or $4 billion or something lost, deleveraged through that deleveraging there. So yeah. Hey there, Cody. Good to see you, man. Pixifin, you thinking the same thing? We got transparent, not anonymous. Yeah, exactly. Hank says, that said, transparency is at the heart of crypto and DLT. Yeah, and I think that's what gets people on this whole idea that it's going to, give them the ability to fight the power. But really, if it's transparent, it makes it easier to control. I mean, at the end of the day, that's what it is. You need anonymous, not transparent, to fight central power, to fight central control. Transparent just makes it easier for them to know what you're doing, to track you, and to do what they need to do for their, for whatever they're doing. So yeah. So I think it's the way it is. Let me see here. Do you think that volatility is created on purpose? If so, any other reasons besides making more money? Well, yeah, volatility is a product of price action. Volatility results from specific type of price action. So if we think about charts and markets as basically the big players moving around, again, what is the quote? The market is a mechanism for moving money from the impatient to the patient, which is another way of saying moving money from retail to pros, which is another way of saying moving money from the have-nots and the dreamers and the overnight wannabe wealthy to those who already are. Because, again, if you're thinking short term, you're going to get caught. There's just no two ways about it. Especially if you're new. And most retail traders, again, they come in toward the top, and so they come into a thing and they come and play this game, which they don't understand. They don't even know the rules of it, much less how it really works. And they get caught, their emotions get upon them. They're oversized position, over leveraged positions. and it makes it ripe to just, nudge the market in the other direction. And then that volatility increases because all of that deleveraging that takes place as a result of liquidations and short coverings from that initial move. So, I mean, yeah, volatility is a product of what's going on there. It's not like, all that volatility is created by, one person or whatever, but it does result from those initial movements. Remember, if you learn to trade via order flow, you might have heard terms of other time frame traders, and that refers to your professionals. And so they're the ones that use retail position as liquidity to move their own positions. So in other words, that's that transfer of wealth in the markets. Yeah. So yeah, I think it created on purpose. Sure. From the point that, those who understand how this works and who play this game and have the size to do it and the knowledge to do it correctly, can push the market in a direction that creates that volatility, which does the work for them. Sure. But, that volatility wouldn't be there if leverage wasn't like it is. If you didn't have the significance of leverage that we have, you wouldn't have the volatility that you have. That volatility is a direct result of that leverage. So, the more highly levered your market is, the more volatility that it's going to show up. Sure. Brian Riley says the idea that the authorities don't know who Satoshi is or was is like OJ searching for the real killers. I like that. Yeah. 800,000 unique accounts. Yeah, liquidated in the deleveraging there. Yeah. I don't want to call it a dip, guys. I mean, the fact is we moved down from 65,000 to 28.9. That's not a dip. I know people are like, oh yeah, the dip. No. That's a deleveraging, guys. That's a significant move down. That's a that's a 50 somewhat percent move down. That's significant. It's not a dip. But it doesn't mean that the top is in. Because, we do have these things that happen because of the nature of what Bitcoin, of what this market is and the amount of leverage available. And, again, everybody, the likelihood is those who got wiped on the way down here, who got knocked out, are probably going to be some of the first ones back in to try and push this back up. We always talk about revenge trading and not to be a revenge trader, which means, a lot of times traders, if they get liquidated, they jump right back in. They're revenge trading. They're trying to get their money right back rather than waiting for a good entry. And so a lot of the new money that comes back in after that kind of deleveraging or the market buying are those people who get wiped on the move down, trying to get back in, trying to revenge trade and get back up. Your bigger players in general are sitting down there just collecting all those longs that are coming, or those shorts coming in and filling their longs within that range. So yeah, it's kind of the way I look at it. Hey, Trader XO, what's up, buddy? Always good to see you checking in, man. Caribbean Crypto, what's up? White Hour 21, what's going on, man? Hey, so anyway, hey guys, listen. If you want to join us and hear more of my ramblings, more of my thoughts, macroeconomics especially, and whatnot, you can join us here at howtotradetowin.com. We've got 3 tiers. First tier is just Bitcoin. Second tier is that and our basic education, traders education, as well as some updates on various markets and whatnot. And a few other things. And then, of course, Tier 3 is just absolutely everything we do over here, which includes, a couple of weekly streams, one specifically geared toward Elliott Wave, another one toward new traders and their tips, tricks, and techniques to get you trading like right away, even if you've never traded before. And then we'll have a third one coming up here as soon as I get all the video issues figured out for Wyckoff. So it's a lot of stuff in Tier 3. It's a lot of information, guys. I'm going to tell you, it's a significant amount of information. Over 80 hours. I don't even know how many hours we have anymore. We're adding a couple hours a week now. So to that video education there for Tier 3. So who knows? We might be close to 100 hours now. But anyway, we'd love to have you there. You can scroll down the page here and kind of compare what's going on down here. the different levels of what we have. These are basic month-to-month prices. If you're serious about trading, you should be getting into a multi-month package, and that'll discount your average price and down quite a bit the further you go out. We offer quarterly, biannually, and annual, and you can save a lot of money with that. But trading's not, guys. Whether you're coming to us or anybody else, trading is not something you're going to learn overnight. Okay, I don't want you thinking that. Anybody that's trying to sell you that is just selling you a bunch of BS. Trading takes time to learn. It's like any other skill set out there. You don't think Trader XO learned how to trade as he does overnight, do you? Nah, it took him a while. And, he continued working while he was doing it until he got to the point where he could do it successfully, consistently, and still be able to pay his bills and do everything, So, this is the reality of it, guys. And it's always a learning process. If you're a trader and you just give up learning one day, you think you know it all, you're going to start losing money consistently at that point. Like Trader XO says, a lot of pain and heartache and emotions. You have to go through it at the beginning, guys. What I hope to do, whether it's here or with TWC, is just kind of eliminate as much of that as possible. You're still going to not listen sometimes. You're still going to have to learn things the hard way. Sometimes it may take more than once. I mean, this is just us as human beings and how it is. But my goal is to get out there and give you the information, to lead you out there, to let you know what's up, and then, to be there when you don't listen, and kind of have to deal with the results of what you've done, and then help you figure out where you screwed up and what you need to concentrate on, so that way you don't continue to make those same mistakes. So yeah. But a lot of it in there, guys, all right? Do I think all the alts are doing the all-time high? This is my biggest question. Will Bitcoin start the rally and crush the bottoms? Or will the alts who do not make an all-time high complete the rally? Well, so here's the thing. I'll use 2017 since that was the most recent one. Those of you that were involved back then, you may remember that coming Q4, everything started going up. Bitcoin and everything else, right? I know specifically things that I traded during Q4 of 2017 that continued to go up were XLM. I didn't trade BNB, but man, that thing kept going up. Again, guys, I tell you missed some. I completely missed BNB coming up. And I missed a lot of Link. But I made a lot of money with other ones as well. So as a trader, you're going to get these. You're going to miss some, guys. It's just the way it is. There were definitely, I think we made money on Tron and get some of the weirdest stuff, XVG, going up through Q4. But everything was going up. And then December 17th or so of 2017 is when Bitcoin topped out. And it was about 3 weeks later, I think, right there into around January 8th or 10th or something of 2018 when alts kind of topped out. During the Q4 is when everything went up. Now, if I have to compare where we are with that kind of process that was there, I don't think we're there yet. But some of the BTC pairs are starting to look interesting. And it just depends, as far as alts, it depends. Are you trading, USD or alt, or BTC pairs? But during the final flush, if we get there, remember, we don't have to get a blow off top. I would think it's probable to happen because that's what has always happened, but it is definitely not, required. And we have to make some steps moving up here to get there first. But if that is coming up, I think, I think alts rise with it. Alts have a final heyday there as well. And then everything kind of just kind of comes on down after that. So yeah. Key was another one. Yeah. Trading is not, it's simple, but it's not easy, guys. A lot of the hardest stuff you're going to deal with as traders is yourself. You're your own worst enemy, your emotions, your impatience, which is the product of emotion. And those, I would never say those are easy. Those are very difficult to overcome. You can do it. It's not that it'll ever be easy. 25 years later here, I still deal with emotions sometimes. It's definitely a lot easier than what it ever was. But I'm not immune to emotions. I'm a human being. So are you guys. Emotion's always going to be there. You just have to learn how to deal with it effectively. It's like if you go and you speak to an audience, public speaking, a lot of people get very scared, very fearful about that. But, you can learn to overcome it, and you can appear confident and even feel a bit more confident. But there's always that little bit of a twinge of fear in there. One of my favorite artists, in Texas music, he mentioned recently that he has very high anxiety, and so it affects him when he gets on stage, quite a bit. And but he's a very successful artist for what he does. He does very well. He's great at what he does, but he has to deal with that constantly. It never goes away. And so it's the same thing with trading, guys. It's the same thing with trading. So trying to see what you guys are talking about here. Let's see. Oh, well, anyway, I'm gonna get on here, guys. All right. So a lot going on here. Like I said, join us at howtotradetowin.com. We'd love to have you there. All right. And be sure you say hi. By the way, guys, when you join, whatever tier you join, make sure that you log into your account on the site and go to where it says update your Discord name on the top left list. Click on that and put in your Discord name as it shows you how to do. And that way you'll get access to the channels. We still have sometimes people join and they don't pay attention to what the emails tell them to do. And then they sit out there and they don't actually join the Discord channel for a while, and we try to email them or whatever because we don't have a lot of ways to contact you, right? But if you're not paying attention to your emails anyway, we can't get a hold of you. If you're not paying attention to what the emails that you're getting are saying to do, the steps involved to get in. I mean, we don't want you guys losing on any time, so make sure you do that. All right. Common Man, I appreciate that, buddy. He says probability percentage of 40 plus silver by the end of the year. Daily chart, ascending triangle, upside target. Yeah, I will talk about silver today. I don't know that I can give you a probability percentage. I'm not a statistician. I can't even say it. But, I'll tell you what I'm looking at and where I'm looking. Sure. I think, honestly, guys, I've said this before. If somebody's telling you, yeah, there's an 80% chance it's going to happen, all they're saying is, I think it's more likely to happen than not. They're not actually saying there's an 80% chance. Most of the people aren't, they don't have statistics backgrounds. They're not using, statistical analysis to figure out the probability or anything like that. So always be careful when you ask somebody or somebody gives you that kind of information. Yeah. So, with the China news and NEO being one of China's major coins, do you think NEO will survive? I mean, I think they all kind of, again, guys, I think in general, everything more or less survives. NEO's done a pretty good job of moving up already this year. We've been dealing with China stuff. I mean, since I've been in, and I've been in, since January of 2017. And so we've been dealing with China nonsense since then. I don't think any of it is really permanent or whatever. There's the argument that maybe the Chinese government is using that to collect Bitcoin. It's possible. It's possible. But I think, again, I think we just kind of continue looking at the levels and the way the price advances. And, we make sure that we pay attention to where those invalidation levels are as well. So, yeah. So, let's go back over here. We'll check it out. Let's go here. So, we'll go look at Bitcoin right here. So we talked about the idea that we've got potentially this expanded flat working out here. So we've got one up and then ABC down, ABC up, and then 1, 2, 3, 4, 5, ending diagonal type thing here for wave C of 2. We got the breakout of the diagonal. We got the breakout of the wedge or the channel. We got the pullback to the channel. We're retesting resistance as support here. And it also kind of coincides, you find confluence with the 1 hour and 4 hour pivot right here. If we look at this, again, it's this kind of area here that we're retesting as, let me see if I can get a better kind of darker color going on there. Something like that, you know, where we're retesting this kind of support area here. See how this resistance is support? We're popping up, maybe about to break out of this smaller descending channel here, which would give us a target of about $2,450 above the point of breakout, if that happens there. And so that's, you know, likely to take us up toward this kind of, you know, I always tell you guys to look left for your areas, you know. Somewhere right in here for that, just that initial target area. You can see how it works as resistance here. And then you've got, you know, a whole bunch of activity going on there, resistance again. So, you know, right up into that area. It takes you right above this resistance here. But, you know, Trader XO does the same thing. You know, guys, he looks over left. He looks left for his levels, his support, his resistance, stuff like that. It's very important that you guys get used to doing that. You'll get so much information from that. People might be screaming inverse head and shoulders here. Probably. And looking right here, left shoulder here, right shoulder. I'm not a big fan of that overall. But, you know, people are going to be pulling for it, right? So right now, we're looking at potentially this interior 1-2 here getting, you know, maybe the wave 2 being down here at the 38.2. If we drop below it, though, I'm looking down here probably toward the 61.8 down here at around 34,590, which will take you right into this 1 hour demand structure right here in the wick. See here. Yeah. So see, it takes you all pretty much to the EQ of that. So, you know, this may just be an A and then a B and then a C down here. But if we get a breakout above wave 1 here, we should be good to go higher. This wave parentheses 3 here has a target of about 51,000. Importantly, what that'll do is that'll take you above the steps we have to get through here is we have to get above wave B here first. And that'll be the first clue. Okay, you know, that bottom might be in there. And then we need to get above this interior wave 4 and then this exterior wave 4 and then this wave B. And so this wave 3 getting up here will take us just about to that wave 4. And getting above that's going to be a good move. That's what we definitely want to see. Until that time, you know, there's still an argument that that this, as the next wave down, could just be subdividing into a larger wave, a larger move down. So that's the way we're going to kind of look at it. I think you start becoming concerned about further down if you're dropping below this swing low right here at 31,078 cents here on Kraken. If you're dropping below that, I think it's probably a pretty safe assumption that you're going to drop below this swing low, this 29.8, which means, again, you're looking 24,000 or so on that. So, yeah, I think probably, I mean, I would look for a first target right here of the S1 pivot at 27,473, 475 around that area. But you know, it could just be, you know, this is a 4 and then this is a 5, just a slightly lower 5 here. And I guess in that it would be like a 1, 2, yeah, see, it couldn't be 1, 2 like that. You've got this above here. It'd have to be like a 1, 2, 3, 4, 5, something like that. As maybe like an ending diagonal. Again, my bias right now is to the upside still because we haven't broken down these other levels. I like that we bounced on the pivot here and we're moving back up. I just want to see some impulsive movement back up now to get it on through there. And I think once we kind of get through this, you know, 44,000, 46,000 kind of area here, I think it becomes a lot easier for price to kind of move up at that point. So yeah, we'll see what happens here as this does. Let me see here. Let's see here. Oh, y'all are talking about silver there still, huh? Yeah, like I said, we'll talk about that. So yeah, you know, this is kind of what we're looking at here. Now, if we jump on over here to, let me see here. Bitcoin dominance. So this went down further than I initially had it, so I changed the count. Here on the weekly, last week we had this bullish engulfing right here. After this move down, this move down's in 3 waves and a bullish engulfing. So, I mean, minimally, I think we've at least got a big going up here. So maybe it's a 1, 2, 3, 4, 5. But, or it's, this ABC as I've got it labeled here and we're headed up. We hit this this demand structure down here from back along April of 2018 is where we're getting that bounce kind of at the S4 there. So a lot going on here. And, the volume, of course, picking up significantly down here at the lows. A lot of interest down there sending it up. The volume associated with this move up was right around the volume associated with these two candles down, but you can see there's a lot larger candle spread here than what there were on the other two there. So less effort, more result for demand here. But like I said, I think if anything, it's a maybe a wave 4 at least. But I could definitely see it also potentially being an ABC. Having this low down where we had this other wave 2 area here. So if we look at this, and then we look over here to the crypto market cap here. Let's see here, without Bitcoin. So, again, over here we had our distribution, we have our, accumulation. And then this kind of becomes that bigger, it's kind of similar to what I'm looking at with Bitcoin, is this, the beginning of this larger kind of distribution area? Or is it reaccumulation before a blow-off distribution top, which then just gives us a redistribution back around this area and then further down? So that's what I think we're looking at right now. We've definitely got a change in character right here. Coming down, so you've got the strong volume spikes here all the way up at the top. And so, that would suggest a buying climax up here. And then if this is reaccumulation, you've got your selling climax down here. If this is a distribution, and it may not go up this high, by the way, it may just be lower down here. But if this is distribution in here, it'll get you this up thrust after distribution, and then it'll come on down. And so with that, you've got your preliminary supply right here. Again, change of character compared to what we were doing up here. Then you get your buying climax and then your selling climax or automatic reaction here. And then we should get this move within this range, moves out through the top. In either case, the movement should be out through the top of the range, which means more money coming into alts overall. And I say distribution, everybody freaks out. Oh my God, distribution, it's going on right now. Well, distribution takes time, guys. Look, accumulation down here, was from, December of 18 until basically June, July of 20, right? So this will take months. If this is distribution here, it'll take through this year to kind of work its way through it, or I expect it will. But again, it's also possible that this could just be one more reaccumulation before a distribution blow off top sends it down. But this, the count aligns pretty strongly with what I'm looking at with Bitcoin. The count I've got going on that. Remember, we're looking at this as the interior 4 of 3 as well. And so what I talked about earlier, when I compared to 2017, I said Q4, everything went up, right? I mean, that would be the similar to what you'd be seeing here. Everything going up at the end, Bitcoin and everything else, and then it all kind of blowing off and coming back down. So yeah. But yeah. So, this is kind of where I'm kind of looking at the moment. You can notice on the weekly here that you've got the weekly R5 pivot, that basically was resistance right here where that preliminary supply would be. Pops up, becomes where it's support right there. But, these pivots will last through the end of the year, these weekly pivots. So, we're sitting at the top of it already, and we're not even halfway through the year yet. Monthly, of course, being the same kind of idea here. I hadn't looked at this monthly candle. That's kind of interesting here. Kind of giving you vibes right here, right? So, we'll continue to look at it, but I mean, I think the count is more compelling to still have some further upside. But as I've said before, we can't rule out that the top is in. Again, I'm going to bring you back to the idea of all the negative news and everything. that tops are usually not, attained on that kind of thing. So your bull run tops are usually there attenuated with a lot of positive news. It's the idea that it can't ever possibly go back down. All the negative news usually attenuates a bottom. Like we were back here when everybody's like, "Oh, it's never going to go back up. It's going down." This isn't Bitcoin, but Bitcoin's going down to 1,000. It's going, like I said, somebody said $57 or $15. And that's you get that kind of opposite up here. And we had a little bit of here. We did have a bit up here, but I think again it's more an interior pullback than the top. And on-chain metrics seem to suggest maybe that's true. But one thing I want you guys to pay attention to is I mentioned, remember y'all, not y'all, but some people consistently said, "Oh, well, all these coins are moving off the exchanges, and that's bullish. That means it's going up, right? Because they're going to stick them in cold storage." And I told you at the time, I said, "Listen, I don't think that's as big a deal as it was, through 2017, because since then there's been all this not your keys, not your coins thing, and we've got all this institutional movement in, and institutions can't just hold it; they've got to put it in custody." So they have to take it off the exchanges to put it in there. So I don't think the idea of how much coin is actually held on the exchanges is such a big deal anymore, like it once was. As far as is it bullish or bearish or whatever? Because you saw just how easy it is to get those coins quickly, get them back on there. And I warned you that was was very possible. So I don't think that, as far as on-chain metrics goes, is all that useful anymore. If you see large swaths of Bitcoin be taken off, okay, so you can use it to say, okay, well, there's institutional demand here, institutions picking it up, but that doesn't in any way mean that you're not going to find a top immediately. So as far as a warning or some kind of indicator like that, I don't think it's anywhere near what it used to be in terms of that. So yeah. There was a lot of bullishness at 65. Yeah, there was some. Yeah, there was some. But most of it was just driven by institutional involvement. That was most of it. And then right after that, all of a sudden we got Musk doing his thing, and then about Tesla not accepting Bitcoin, and then we had Square not buying any more Bitcoin for their treasury, and then we had China, and then we had, and it was just this whole thing of just this sudden negative news, which seemed more like something that pushes it down. See, when you get to the top and you drop it first, people get scared, but then there's always good news continuing on. There's not like bad news coming in, because that gets, people are still buying. They think it's just a pullback. It'll continue higher. But again, this pullback, this move down, this deleveraging was attenuated with negative news all through this here. And the thing is, if you've got all this negative news down, people are not interested in buying. And so that's what kind of makes me think that it's more of an internal, just using that alone, why it's more internal pullback than a top. Because usually at a top, you're still going to have, even if you don't have a whole bunch of positive news here, which you usually still do, you're not going to have a whole bunch of negative news generally. Because that negative news keeps people out of the markets. It makes them believe the bottom's, or the top's in. And if people are out of the market, when they're done there, they're not going to continue to buy back in. And if you're creating a range, if you're trying to get people to buy and sell, you need them to now buy. So negative news doesn't help with that. So again, from the way in which it's applied, it doesn't seem to kind of follow in what we would generally expect for a top. At the bottom, that negative news just continues and continues and continues. Down there, again, to get people to sell and to get out. But here, you want them buying. If this is not headed down lower, you want them to continue buying. And you can't do that if you continue with the negative news. So, yeah. So just kind of something to think there. So I think we're still, headed up here, and there's not a whole lot of reason to believe that we're not at the moment, but we do need to make some moves. We need to get locally above this wave 1 here. Well, then we need to get above wave B over here at about, 42,559. And then the next step is to get above wave 4 up here at 45,823. And then the larger wave 4 up here, the exterior wave 4 at 51,540. And then, of course, wave B up here at about 58,600. 59,600 area. Those are levels you got to get through, and each one you get through should add a lot more confidence to the idea that the bottom's in. But until we, get through this minimum wave B here and then this kind of wave 4 here, price is still vulnerable to falling down lower. But we can note that as prices dropped here, let me do this. Large volume, large drop, right? Another decent sized drop here, large volume. Another drop, lesser volume. Another drop, similar to this previous one, but lesser than these here. You got the pullback. Oh, this was the top up here. So yeah, if you're looking at these drops here, less and it's kind of dropping off, less and less interest. And that's generally what you want to see at a bottom. You don't want to see a lot of continued, expanding interest, because that means more and more people are selling into it. If you've got less volume coming in as you continue to drop back here, it tells you there's less interest. If there's less interest, price, everything else left aside, price is going to rise. Because price rises inherently. We're in a market that moves left and up. Equities, crypto, commodities in general. So left to their own devices, price generally is going to rise. So when you have the supply backing off, you don't have to have a significant amount of demand coming in. Just as you get supply backing off, price is going to naturally rise on its own because you've got that base level of demand that continues to push in there. Now, as I talked about, you have this big, what I believe is probably a capitulation bottom here, as I've said, due to, again, the significance of supply, the spike of volume here, as well as the very large lower wick, which actually is larger here, as you go to those larger time frames. So the spike of volume tells you that there's a significant effort to try and thrust it down. The large wick says that it happened, but that was all it had. It had like a punch, that was it. There was no follow through. And so demand then took the punch and got back up and kept hitting back, ends up way up here. So the combination between that usually will mark a bottom. Can't say all the time, can't guarantee it, but most often this combination after this move down denotes a bottom. And then you get this secondary test of this support down here. And so the secondary test, again, you're looking for this drop down, toward this area, and you're looking for a lot less volume. And that's what we have here, what I showed you on the lower time frame. And what this tells us is there was all this intent, all this supply to try to keep pushing price down, and you had all this other demand picking back up. Here, supply is wiped out here pretty much, is what it seems to say. And so, again, nothing significant has to happen in terms of demand. There's just a lack of supply really coming in compared to what there was here. So that gives us a successful retest, which again sends price up. Now looking at the 4-hour chart here, we come back, we pull back, we pushed up through the pivot, pull back, basically finding support on the pivot. We generally should expect to continue higher, but we've got to make sure we watch those swing highs that I talked about. In terms of candlestick structure here, you've got this large push down, and then you've got the next candle over, the next 4-hour candle almost completely engulfs that while it finds support on the pivot. That's a pretty strong indication it'll likely head higher. But again, you don't just assume, you need to have some follow through. You need to see follow through now. But this is a good thing to watch to say, well, I think maybe that bottom right here, and we're headed up higher. Jumping out here to the daily. Again, same idea. Large candle, large spike of volume, large lower demand wick. And then we come back on a secondary test, much less volume, like half the volume here. Another large demand wick on terms of that candle there. And we're heading up. Now, in terms of candles, we've got this this move down over 3 or 4 days. So we got a bit of a downtrend. So we've got a bullish engulfing candle coming off here. But again, a bullish engulfing candle does not necessarily mean reversal. It means pause. So what we need now is to see some follow through here to kind of confirm this reversal here. But, again, as I've been explaining here, it looks like there's a lot of possible, a lot of potential, a lot of reason to believe that the bottom may be in. But until we get those moves above those swing highs I was talking about, kind of in succession there, price is still really vulnerable to falling lower. And like I said, if it does, then we're headed down there toward that 24,000 area, I would think. We can look locally at that 27.4 or whatever, just as that S1 pivot on the 4 hour there as an initial target. Maybe this being just a 4 and then this is a 5 down here, maybe 27.4. But, I really think we kind of would continue on down toward that, that 24,000 or something to finish a much larger correction. That would just be like, I would just assume that's wave A. And then we'd have wave B up and wave C down, which means heading down probably below, 16,000 or 12,000 and something like that. And I don't think that's coming right now. I don't think so. But we've got to see how it plays out. We don't trade on what I think, right? What you think is going to happen gives you a narrative and something that gives you, it lets you help you find your place in the market. Where are we at in the market? And then you need to see, is it going to confirm what you're thinking or invalidate it? It's not a bad thing if you're invalidated, guys. You've got to start somewhere. You've got to figure out where are you in the market. Where is the market in terms of where it is? And so you have to develop some sort of narrative, some sort of idea. And then that gives you a way that you can look for validation in your invalidation levels. And then that tells you how you should be trading. I think too many new traders think that they need to, that they're always going to know exactly where the market is and what's going on. You're rarely going to know that as traders, guys. Rarely. Sometimes you're going to get a really good feeling about where you may be. Most of the time, lukewarm at best. But that's what it means to be trading, guys. Now, I know a lot of your big accounts online, they're going to make you think otherwise. Understand they're doing what they're doing for a reason. All right? I mean, they make their living off you buying stuff from them. Yes, we sell something, but, if it got to the point where it wasn't doing anything anymore, I could easily just turn it off and be fine. I'll just be trading all the time as I do anyway. But a lot of these other accounts out there, that is their form of income. So they need to, because you come in, you create this situation. Because as new traders, you come in and you demand that somebody tell you what's going to happen. You demand that somebody gives you guarantees, which is not realistic. It's not how it really happens. But you don't know that. You're new, right? And so, but these other accounts, they want to make money. And so they're going to give you exactly what you want to hear. Because all they're worried about is who's the next person coming in paying, buying something from them. But I've been doing this for live here, since 2018. I've never said this is what's going to happen. Now I've had strong opinions, but never said, listen, this is it, and you need to be selling or you need to be buying or whatever. Always with the idea that, okay, if this is what I'm thinking is happening here, then we need to see this happen. And if it doesn't, then we're doing this other thing. But most of the yahoos online who, want to talk smack, they don't ever listen to that. They enjoy spending their time online talking trash rather than actual trading. And it shows. So I think, if you want to be a successful trader and that's something you're doing, I think you have to step back and go, okay, well, where is my time better spent? Is it better spent trying to learn how to do this, or is it better spent acting like a tool online? I mean, I know what my answer is. But that's why, guys, if you come at me like that, with something like that, I just usually ignore you. I'll usually, and most of the time I'll even block you. I don't have time for it. It's childish nonsense. You either want to be a trader or you don't. And if you're coming at me like that, then you don't want to be a trader, and I don't have time to help you. And so, a lot of people online, they're like, oh, but it's online. You shouldn't block anybody. Freedom of speech, blah, blah, blah. Please. You're on my timeline, man. You're on my Twitter feed. I have no problem booting you. It doesn't bother me in the least. I don't have to do what I do. I choose to do what I do. But I'm not going to force people to listen. You either want to listen or you don't. If you don't let the door hit you on the way out. That's life, guys. You need to understand it. I do not think there's a better way to understand life than the way in which you approach the markets. Because if you approach the market in anything other than that kind of idea, that kind of mindset, the market's going to eat you for lunch, man. And then you're going to go and you're going to cry about how everything's manipulated and how Wall Street took your money and how Elon Musk took your money and, whatever, instead of realizing, what, it was completely your fault. You came in, you didn't do the things you needed to do to learn to do what you're doing. And the results show. And I know it sounds harsh, guys. Life is harsh. Life is not fair. And I'll tell you what, if you are offended because I said life isn't fair, I'll let you talk it over with my sister right now. She'll let you know just how unfair life is. You need to decide in life and in the markets whether you're serious about living life, whether you're serious about learning to trade, or you're just kind of acting, like you are. Because unless you're really serious about it, you're not going to make any headroom. Not in the markets, not in life, guys. You'll continue to be a victim. It'll always be everybody else's fault. It's such nonsense. You guys are better than that. Day in and day out. And why do I know? Because I've been talking to people for years about this. I've heard every story out there, guys. And I've got my own. I know. You can lie to yourself all you want. You can lie to other people all you want. But at the end of the day, if you're not legit about being in here and wanting to learn, it's going to show in your results from the market. It really is. If you want to be online and social media to just jerk about and act a tool and just be a total douchebag out there, it's going to show in your trading. I will never take you seriously. I will never. I have no respect for somebody who comes online just to talk trash to everybody else. I really don't. I mean, to each their own. I wouldn't say, hey, you should be kept from doing it. But I know what it takes to get where I am. So I don't have time for anything else. And I hope that makes sense. Okay? Anyway, and I do, Crypto Night, I appreciate that, man. Yeah, it really is. That's what it's really about. You're not going to get fluff or nonsense from me. You're going to get real talk. Because I assume that if you're here, then at least there's some part of you that really wants to learn to trade. And maybe you're not completely off the nonsense yet. But if I can be real with you and be direct with you and make you think and make it go, aha. And then, you really kick into fully wanting to be serious about being a trader and wanting to be serious in life about being a decent human being even. I mean, it really goes that far. Then I've done what I can, right? So yeah. Blaming others makes you powerless. Exactly. I've got the bag. Hey, I appreciate that. Thank you. Yeah. Real bad situation there. I'm Deuce. You don't think you're the target demographic for that speech? Well, if you really don't, then let it build you up anyway. Let it help you, keep confidence in the way that you've been, the way that you're acting. Hey there, Jordan. Good to see you. But yeah, guys, seriously, at the end of the day, don't ever come at me with the life isn't fair BS. I know. I say BS. I mean, don't come at me with the with this idea that life is supposed to be fair. It's not. My sister's going through a very hard time right now because life isn't fair. And I can't even tell you how powerless that makes you feel as somebody else on the outside trying to help them hold it together. It's tough. But anyway, we're going to go on with this here. So that's kind of what we're looking at with this here, all right? Yeah, Matic USDT, I'll check it. Here in a minute. Sure. Let's go through this other stuff real quick here. DXY, let's look at the other one. I've got the one. Here we go. Again, guys, possibilities are possibilities. It wouldn't be the first time that I've seen a macro reversal or, a reversal happen so close to a macro invalidation point. But they aren't very often. They're more rare. I mean, so I've got a count here that says, okay, we can have an ABC down, and this C being an ending diagonal, so ABC, ABC, ABC. But it is absolutely up to the bulls right now to show that it is the bottom there. Until they show us, you have to be prepared for lower down. So what do we need to do right now? Well, I mean, the good thing is we bounced off the S2 pivot. That's a good thing on the 15-minute here. We need to get above the pivot. That's the first step. As far as the count goes, we've got to get above wave 4 here at, what is that? Yeah, dug it. I just had it. At 90.287. Got to get above that. That is minimal what we need to do. Not even the pivot. It's that. Minimal. Now, getting above that is potentially going to take us out of this channel, which starts adding some support to the idea that maybe a bottom is in. Breaking out of this channel gives you a pattern target of 1.342 above the point of breakout based on the height of the channel. In terms of this count, though, once we're above that 4, internally we need to get above wave 2 here, but really we need to get above wave B. So this 91.436 kind of area. Now, if we can get above that, then things start looking really seriously like the bottom may be in. But even with that, as I've continued to tell you guys for weeks now, or even longer, we've got to get above 94.741. That's the key level. That is the level. If we can get above that, the bottom's in. There's no reason looking lower. Until we get through that, though, there's so many ways you can dice and slice and dice this here. But each one of these levels, wave 4, wave 2, wave B, wave 1, and then wave 4 up here, I mean, each one of those adds significantly more support to the idea that maybe the bottom's in. But remember, that macro invalidation level from January is right here at 89.209. It's still there. So, it's pretty close to it. So we'll have to see what happens there. Let me see here. Yeah, I mean, the Euro USD is basically the flip of this right here. More or less, if you want to know what the Euro USD looks like, there you go. I mean, pretty much this is what your Euro USD looks like. Because, again, it makes up 57 point whatever percent of the DXY weighted value there. So, this is kind of what you're looking at here. So, again, very close to breaking out of that. Now, you're talking about a 13-year-old channel that just got denied top of the channel starting from the 2008 all-time high. Whoops. Let's see here. Flip that back. I don't know. Let's see what we can find here as far as the channel goes. Zoom this out a bit. 2013, huh? Oh, they're looking at something like this, it looks like. 2013. 2013. No, I mean, the top is up here. 2008. Top of the financial crisis there. I mean, it's not breaking all, it's not getting rejected by anything here. It's above this channel top here. So I'm not sure what they're talking about on that. Oh, you said 2008? Why did I think you said 2013? But anyway, yeah, I mean, this is the parallel channel right here. I mean, it's well above it right here. Yeah, see, it's up here. That channel comes down right down here. So I don't know what kind of channel they're trying to draw off there. Yeah. Just trying to figure out what kind of channel they might have been looking at. Yeah, because coming off that, it doesn't hit where you're trying to look at there. Let's see if we can do this. Let's see if that gets rid of, man, all that stuff. Give me just a minute, guys. Let me kind of get rid of all this and send it to the lower time frames there so we can kind of see this area here a little bit better. And then we'll jump on that Matic there and check that out as well. And silver, we're going to check that out first. Kind of give you my thoughts on that. Let's see here. What is going on here? Oh, I think it's a head and shoulders stuff. Yeah. Almost done, guys. Thank you for holding on with me here real quick. There, now it looks pretty, right? Let's see here. Yeah, so coming off of 2008 here, I think you were saying it was rejected. Oh, maybe you mean support on it or whatever, maybe. I mean, if we're drawing it legitimately off the peaks here, we drop down, we break back down, we break back, and I don't like this as a significant area of support or resistance because you're bouncing around between it. If it's a significant area of support or resistance, it should hit it as support and bounce. It shouldn't dip down into it. Oh, the channel works with log off. Yeah, but why would you look at a channel from that has a difference of 35.4% here, without log on, why would you look at it like that? I don't know. Let me see here. See, you break out, you fall back in, you push back out. You're not finding real support on there. Now, I mean, you can make an argument maybe here for this right here. That, to me, would be a much more legitimate breakout right there. Because you break out, you come back, you retest as support, and then you continue up. But that's just a bit of resistance. There's no, pattern in that. I don't know how else we can maybe look at this. Put it back on log there. I don't know, some things we could look at here. How does that EQ work there? EQ's decent there. Looks like, we're finding resistance right here before we move in. Finding support, resistance. A little resistance when we dip down. It was resistance, then we pop back up through it. Kind of finding support on it. Kind of okay channel. Let me see here. Kind of change this to the different template here. Oh, doggone it. Gotta change the visibility there. There we go. What's interesting about this drop is you're not really dropping into... You've got liquidity here. This is your demand structure here. But you're bouncing prior to it. Now you're bouncing in relative to kind of what you've got going on here. Can you get that in there? So you're kind of bouncing out of that. I could see some possibility in that. You have this strong move back up, so you create this area here, move back up strong through it, and then you bounce on it. I could potentially see that there. Give it that area there to bounce off of, sure. And if we look here on the monthly, it looks like maybe we've got 4 up here, but again, with the monthly, there's potential that that you've got like a B, and then coming up through here is a C. But from the monthly, there is possibility we got 5 up, and then I guess this would have to be A, B, C down here at the lows. I'm kind of iffy about that, but possible. We found support here. We had the previous area support over here around October 17. And of course, finding resistance right here in this area of resistance, which, as you can see, again, looking left here, is this whole area right here. Resistance, support, even though it dipped down, the candle spreads found support there. Support, it dug down, pushed up, rejected. And then the question is, do we break out and head higher, or do we get rejected there and come back? That's what I think we're kind of looking at here, is this area. I think a good argument could be made if we break out here that this does continue higher, which again takes the DXY lower. I think a good argument could potentially be made at that point. And there's always other areas here. Again, we've got this area right here where we'd have to watch as well. So it could just be a breakout from here that takes us up to here and then back. There's a lot of consolidation right here. That's a lot of territory that you'd have to work through on that. And we could actually see this as an A, B, C here. So, maybe, I don't know, maybe this is a diagonal. Maybe this is an A, B, C as a 1, 2, A, B, C as a 3, 4, and then A, B, C as a 5. Now, what does that mean, long-term implications for the euro? Again, this is 1, 2, 3. This would be 4, potentially, maybe even up this high. And then 5, I think 5 would find it right here. And then you'd be looking at, again, 1, 2, 3, ABC coming up, probably around that wave 4 area. And then you have to be looking for 5 more down to potentially finish that off. Possibly. But I mean, when you zoom out this bigger time frame, you eliminate more noise. And so just judging by this, I think it's possible. Let me see here. What kind of retracement do we have on this? I know Hank's loving this, well, for the most part, except to get to the point where he said euro goes back down. But again, guys, no matter what your thoughts are, you always have to be open to other possibilities. And I know Hank knows that. For the rest of y'all, though, make sure that you know that. I'm trying to see if maybe we can have like an ABC down and then 5, it's just like a 1 and then a 2 and then push up higher there. But this has come down already 65%. That's hard to argue that, maybe this would be an A in here somewhere, like a 1, 2, 3, 4, 5 maybe. That's a hard argument to make at 65% on the pullback. Though, you know, you could just have maybe like a short wave C coming in there. You know, and you kind of look at this and you say, okay, what does this do? Well, I know you got like a 1-2 and then a 1-2. So maybe you've got like a 1, 2, 3, 4, 5. Maybe 1, 2, 3, 4, and then 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. I don't like that count a whole lot. It's kind of iffy up here. I mean, I guess you could always do like a 1, 2, 3, 4, and then 1, 2, 3, 4, 5. And you got a 1, 2, 3, 4, 5, and so that's a 1, 2, 3, or an ABC. Really small AB, but you know they happen occasionally. So again, not overly thrilled with that kind of idea either. So yeah, we'd have to see here. So yeah, I think this is a lot of pressure though, downward pressure. I mean, you got to look, guys. This is a top here. You know, all this here. I guess we can even go down here. I mean, so this is a top forming here from 03. You were rejected in May of 03, sent back, and then you went in it. And then you had selling and selling and selling and selling and selling and selling and selling. I mean, you've created basically a range here. And the one thing you notice is through this range, volume is expanding. Remember what I talked about? Distribution, volume expands or gets kind of crazy in there, a lot of ups and downs or whatever. A reaccumulation, volume declines. It drops off. Because the idea in reaccumulation is all that instrument or that asset or whatever you've got is being pulled away and stored away. So there's less and less to kind of continue to sell into it, so your volume drops off. But in distribution, remember, you know, you got your big guys in there constantly selling until there's no more demand to pick it up. So you're, you know, and they'll sell more and more as it develops. As long as you've got demand continuing to build up, you're going to have more and more supply being sold into the market and in distribution because you can absorb it. So they're going to sell it into you up here. I mean, look at this. The peaks here, this area. Peak here is this one up here. This one not so much, but this one here on the drop. This area up here peaks up, pulls back. And you see how your volume really just starts, you know, increasing as you're getting down to this area here. So, I mean, I haven't done a Wyckoff on this. I might have to do that. But if I was looking at this, I might assume a channel that looks something like this. Get back in there, stupid thing. There we go. So, I mean, this becomes distribution here. You've got lower highs, you've got lower lows. So, you know, you come in preliminary supply, buying climax, automatic reaction, up thrust, show of weakness, Lipsy, comes back down, Lipsy, breakdown through the ice here. You come back up, try to get back up, another Lipsy, potentially another Lipsy here, and then you know, your Lipsy, your last point of supply, and then it continues down further. There's a lot of volume in this one monthly candle right here. That's why. March of 2020. Look at all that volume. That's when we had March of 2020 there. But, you know, if I'm looking at this, I see a lot more signs of potential distribution here than reaccumulation. And if this is distribution, there's no way this is going up too high before continuing back down. it should get broken down within this area at least. So that's just looking at in terms of Wyckoff right there. What I'd be seeing there, when we see with volume and the price action here. So, yeah, I could see this pushing up, but that, this pushing up would just do what we were talking about with, with the USD, a fifth wave down lower into the 80s there, right? So that would be the culmination of what's going on here with that. I mean, if we're looking here, we potentially got a 1, 2, 3, 4, 5, 3 back, and then you'd have one, moving up there. I don't know, unless this is, we'd have to zoom in quicker to see where this, how this works. Oh, okay, yeah, see 1, 2 there. 1, 2, 3, 4, 5, 3, 4, 5. Yeah, so potentially, at or near an end. We'd have to see. But again, here it looks like 5 up. But if this is similar to this here, then this could be, 3 up here, as this is potentially 3 up here. Right there. It makes a lot of sense, to get rejected here, or maybe even just to push up a bit more into this. It doesn't make sense, I don't think, to push up through this. You're not going to distribute in this area here just to reaccumulate right here, just a tad bit shorter. You see what I'm saying? I think maybe this first tap here becomes, that removes most of the demand sitting here, and then it comes back down through it and falls through, and then we go. I think maybe what we're seeing there. So interesting. That would bring Bitcoin up. I don't think so. Well, I mean, if the euro moves up against the dollar, that means the dollar's weakening, and that at least relieves downward pressure on Bitcoin. Yeah, so you won't have that downward price pressure on, BTC USD there. If the euro's to move up, and which would take the dollar DXY lower. Yeah, I mean, so it doesn't mean that Bitcoin would have to go up, but it just means that that particular price pressure, downward price pressure, would be alleviated on that. Sure. So yeah. Guys, if you're in Discord with us, in, tier 2 or tier 3, you'll be seeing, I think I'll do a big macro thing on this Wyckoff wise and kind of really expand on what I'm looking at here and seeing what I can maybe figure out from that. Sure. Let's see here. Silver was asked about, so let me get on that. And then we'll look at Matic. Oh, come on now. Catch up. There we go. A little bit. Macro TA, correct me if I'm wrong, but anywhere above March 2020 low is still a higher low on a macro count. So Bitcoin can still go to 6K and still be in a bull market, right? Let me see here. How's the best way to answer that? Why you got to ask questions like that? So if we're looking at Bitcoin here, let's zoom out to the weekly. So, it really just depends on where you're looking at. I mean, obviously, from down here in 2014 or prior, we're high, low, higher high, higher low, higher high, potentially lower low, still coming in. So, in terms of the overall chart, we're still bullish overall. Sure. I think that changes if we ever drop down below. Well, right now, this is the swing low. We would have to drop down below this 3,100 and some change here. And that would then end the macro bull from the beginning. See what I'm saying? Because that would take you down to now, again, you've got, and coming up here, you're going to have the high, the higher highs and the higher lows. But that's your last lower low in terms of this overall move from 2010 up. So that's your recent higher high. So if it were to drop down below that, that's it. I think as long as you're above that, you're still in this large 11, 12-year macro bull run. In the grand scheme of things, you still are. Now, if we're looking locally here and you're coming off this low, high, low, lower high, yeah, as long as it stays above this swing low here, it's right about 3,900 or so on Kraken. As long as it stays above that, then technically off this December 2018 low here, this 3,100, technically, you'd have bullish market structure. Let's say that. Bullish market structure, yeah. Now, locally here, obviously, we've got bearish market structure because we have a high, a low, a lower high, lower low right now still potentially. And we would need to break out above, again, this is wave B. This is what I keep talking about, that 59,600 kind of area. We've got to get above that, and that breaks out of this bearish market structure right here. But again, if you zoom in really close, down here the 1 hour or something, it always depends on where you're looking at. So in this place, we've got potential bullish market structure building. It's not there yet. All we have is a low and a high and a possible higher low. But this does not register as a higher low until price gets above the high. Because until it gets above that high, price can still roll over and head lower. So low, high, higher low, or it gets lower there. Now you got a lower low. So if price can get above this swing high, this is why these areas are important that I tell you guys about. 42, 5, 60 basically. At that point then we have a high, a low, and a higher high. Now we've got, at that point we would have bullish market structure. So like I told you, we really need to get above that lower, that interior B here. Remember looking at a 1 and then a flat as a 2? So you've got A, B, C. That B, we got to get above that. Got to get above that B. That will give us bullish market structure here. For right now, we're just in this larger bearish market structure still. Yeah, hope that makes sense. Let me see here. Let's see. So we were looking at what there? We were just looking at some euro, right? We can jump over here, though. Silver from a common man over there. All right. So, okay, so we got to move up this morning, so that invalidates this 2 here. Looks like we just moved up there after I did the chart. So what I'm looking at right now potentially is a wave 2 up here, and then a 1, A, B, C is B, and then, we'd be working on C here. So we're going to have this going up here, probably around that 70.5 at the R1 pivot. I think that's what I told Discord. So this would be looking at as, a 1, 2, maybe a 3, 4, and then a 5 up here. Now, as far as the bigger picture goes, all we're doing is just kind of moving sideways here. Now, if I have to choose something that I don't like structurally from here, this is our range, guys, okay? So this is what we're working with here. This significant amount of volume, this huge volume spike up here at the top is not what I want to see for reaccumulation. That is a lot of supply coming in up here around this previous area. As a matter of fact, it's more volume than we saw initially. So you had selling here, and then you had selling here. And this is your buying climax. So to get a significantly more selling up here at your upthrust, that to me really warns that we may be seeing distribution here. As a matter of fact, the level of selling came in there is pretty close to your initial sell-off from your buying climax there. All right? Now, there's not enough done here, in terms of Wyckoff to really say what's going on. But this is a warning sign to me about the idea that maybe this is reaccumulation, we're heading higher. But we'll see how it plays out. It's possible that maybe we've got a declining distribution here. So buying climax, and then this becomes declining reaccumulation here. So buying climax, selling climax, automatic rally, spring, last point of support, I guess would be right here. And then you'd have this breakout here. So this becomes a show of strength back up the edge of the creek, show of strength, and then kind of moving up. But I need to see this play out a little bit more to kind of get that idea maybe. So yeah. But I am concerned about the amount of volume that came in at the top here. That doesn't mean that this has to be distribution, but it does mean I'm not blindly going, oh yeah, YOLO, it's going up from here. And you know, and you really shouldn't be that way with any way that you trade, guys. You have to pay attention to things out there. This doesn't mean you can't go long at some point, you know, in this area if you wanted to. But what it means is right now coming in with that significantly more volume right here around this previous swing high up here where the buying climax is, which had less volume. So what you're telling it is going sideways here, you're getting even more selling going on further into the structure. And again, with distribution, that's what you see. You see more and more selling further into the structure. Now, as far as that goes, if we look at this whole structure here, you know, this could just be your up thrust, and you could get a move up higher to be, you know, up thrust after distribution. But you would expect to then see, you know, a similar amount of volume coming off, or even more so coming off as you get up there. Right now, volume's pretty muted. You've got actually declining volume. Let's see here. You had declining volume on the move down. Looks like you got a little bit of rising volume on this move up here. I don't like the fact there's a lot of overlap here. That's not very bullish. It doesn't mean that it can't continue higher. But again, when we look at structure and the way that, what does it tell us about what's going on? When you have a lot more overlap, that tells you there's a greater amount of supply coming in, because it's enough that it's pushing demand back down into its previous area. Now, again, that doesn't mean demand can't pick up and move through that. But this, you know, this kind of overall movement here, this right here, this is bullish. You see, you're not pulling back into your previous areas here. Here, all the way up, basically, other than from right here, from basically April 19th or so, all overlap. Look at all overlap in the entire way. So, you know, it's possible, without looking at anything else and counting whatever, maybe this is an initial move up. Maybe it's like a wave one as a leading diagonal, maybe. And so you're getting that overlap as part of that. So that's always a possibility. But because diagonals are the exceptions to the rule, you know, it should have you remaining cautious as you trade. Yeah. Let's see here. So yeah, that's kind of what we're looking at as far as that goes. You know, we are up here at this previous resistance, and you got a little bit above it over here as well. So, you know, could see it going up there. What do I have here? Now, here's my one thing. Now, right here, we got a 1, 2, 3, 4, 5, right? Well, and an A, B, C maybe, right? So you can go 1, 2, 3, 4, 5, A, B, 1, 2, 3, 4, 5. So, I mean, you have 1, 2, 3, 4, 5 down, A, B, C up. So locally here, I mean, it does make a case for this being, you know, this being the first wave down, this being second wave on the pullback, and then we've got a wave 3 coming down. Now, maybe there's something in it with, you know, when you kind of zoom into smaller time frames, maybe the count's a little different. But again, you know, you always start with your wider count, your wider time frame, you zoom in, because it gives you a better idea of at least of what may be going on. And right now, again, 1, 2, 3, 4, 5 down. I've got 5 down coming off that top. And if I've got 5 down coming off that top, then 3 up is the next move. The only thing that would be different about that is if it was a flat. So you would have an ABC down and then an ABC up and then 5 down as a C. And if it could, and, you know, if it pulls back toward, you know, 61% or whatever, potentially a running flat. So we could get the ABC down here. Let's see here. This counts a little bit crazy here, but let me see. I guess if we just look at the big movements here, maybe in this, God, man, this count is so rough here. If I look here, it looks like we got a 1, 2, 3, 4, 5. It looks like we got ABC. 1, 2, 3, 4, 5. So this is what we would expect. So yeah, so we've got 5, 3, 5, 3, 5. I mean, you know, again, so that looks like a finish off there, and then we've got 5 down, and then 3 up. So I don't know. We'll see what happens. I mean, if I'm looking at the count here, that's why my primary continues to be more to the downside. But, you know, again, it doesn't guarantee. We've got to get down below initially, for lack of a better saying here, the daily pivot here at least. That's basically your A here. So again, 1, 2, 3, 4, 5 gives you A, gives you B. You need to get below this B. So basically below this 25.745. If you get below that, that seals this off as 3, and that should tell you that you have at least 5 more going down with the new lower low here. I say at least because you could have an A and a B and then a C. You know, maybe this counts different. But this looks like 3 down. This looks like 5 up. This looks like 5 down. This looks like 3 up with 5 and then 5, right? So, yeah. So I hope that makes sense, guys. Again, you know, a lot of what I do here, I go over things and I repeat things because my hope is you guys are going to continue to come back. You're going to make time for it. But even if you don't, I hope that I at least give you something to leave with. Some kind of better understanding of the markets. Again, this is what we go through all the time over in Discord, especially at Tier 3. But, you know, even if you're just here for, you know, twice a week, I hope that you at least leave with something that helps you out a bit. So, yeah. Let me see here. So, I don't know. You know, I think somebody was asking maybe a ascending triangle. I think it's really poorly well formed if it is. Because price would generally be seen to be riding the low, the support. And remember, you know, the patterns, you want them to be confident. You want them to be definitive movements between support and resistance. So, yeah. So, that's what I'm looking at with silver there, guys. Back, you know, much larger picture here. Again, everything else aside, my big concern is that we got this huge volume up here at the previous high where we had lesser volume. I mean, we still had strong volume there, but definitely much more volume coming out here, which tells me as we've gotten into this structure, more selling has come in. Which means if we get this reversal here and come on down, we should see volume kicking up as it comes on down through here, and especially as it breaks down below this kind of 22 area, if that's what happens. We should really see it kick in. And in terms of Elliott Wave, this is a 1, this is a 2. That would be wave 3, and this area would probably be wave 3 of 3, which is where you tend to see the most volume come in. Wave 3 of 3. So the confluence in something like that happening is there, but again, we need to see it happen, guys. First step, you know, draw you a channel here. First step is a breakdown of that channel support. If you get a breakdown of the channel support that says, the top may be in there. And then you need the pivot, which might be gone by the time you get there, but it's this wave B low here at 25,745. And if you get that, I think there's no reason you should be looking up. You need to be shorting, looking for at least the lows of the range. If you break down from that, then you know you really get that move down further. So we'll see how it goes. You know, again, we have the things we have to see. And if it breaks out above this swing high, this $30.35, then that invalidates what we're looking at that way. We'll have to zoom into these smaller time frames and see if the count is more ABC on the move down here and 5 up on the move here or something. Okay? Excuse me. So make sure that, you know, that's what we're watching, guys. You know, I think a lot of times people get in here and I say something, they go, oh, well, you know, you said it was going to do this. No, I said that was my opinion at that time based on the information there. But I also, as I just told you here, here's our invalidation level. Here's our validation level. These are the steps you needed to go through. If you're not catching that when I say it, Just move on. Don't trade because you're not paying enough attention. And you absolutely have to pay attention if you're going to be a trader. It's important. You have to note when new information comes out in the charts that says what you were looking at is no longer making as much sense, so that you can be on the ball to see what may be going on, what may be different, and if you need to change your perception. But most people that are coming here listening to me, they don't catch that. They don't understand that. They're just like, oh, you said the top's there and that's all. And it went higher, so you're wrong. You're an idiot. No, you're the idiot, and that's why I block you now, because you're not paying attention. And I hate to say it that way, guys, but at the end of the day, it is what it is, right? Let's be honest. So that's that. Let's look at Matic here. I got somebody who's going manic about looking at Matic. I realize it's taking me a little bit longer to get here. I appreciate your patience, man. Let's see. So it looks like I just updated this yesterday. So I've got it pretty much in the same potential count as Bitcoin right now and a lot of the others, with this being 4 of 3. So we had a great low here. And so we had the volume on that low. Look at this. I want you to understand this here. So your 2 drops, right? Volume dropped off. Both of them had good demand wicks. So in both of them, demand showed up. Much less volume, almost what? 2/3 or a half of the volume was what was in the previous one. In this lower one, that means less supply available. Supply exhausted itself. Great lower wick there shows demand showed up in relation to supply. Pretty much a hammer candle, potential reversal. It's a pause, potential reversal. We noticed this happened right here in this cluster of activity, in this demand structure right above the pivot. Bouncing off the pivot. Positive. These are all bullish things. We have the next day, we have this bullish engulfing candle. Huge bullish engulfing candle. Pretty much took us back to where we were 3 days prior before the big drop down. Very bullish. Now we need to see follow through. Now we may see a little pullback and then follow through, but ultimately we need to see follow through. So this pause, this hammer type candle here says pause. This bullish engulfing says pause, potential reversal. And now if we can get follow through, that'll give us the reversal. Minimum wave 503 target at 3.59558. Secondary target at 5.87329. So that's kind of where I'm looking at it. You can see here on the daily that we bottomed out and oversold, crossed bullishly, threatening to break out now. And RSI dropped out of overbought here. The other good thing I see on this right here from just a RSI perspective is that you're getting higher highs. At the ultimate tops, at the tops of bull runs, you're going to get generally a divergence. You're going to get a lower high in your RSI and a higher high in price, okay? Instead, we've got higher highs and higher highs. Volume, you'll often see the same thing as well, because as I've told you, often wave 3 is the highest volume, and then you have a volume decrease in wave 5, so you have volume divergence. So if we look at this here in terms of this being wave 1 over here, 2, this being 3 here, well, this 3 area has the greatest volume right here coming up. So wave 1 is here, it goes up to wave 3, and then as it goes up to wave 5 of 3, we should look for it to pull back down overall. However, it being 3 of 3, we could see some volume potentially picking up there on that in terms of this one here. But nonetheless, we don't have divergence of volume. We don't have divergence of oscillator. And then everything else, I just kind of went step by step here. All the different ways of looking at the chart here. Whether you're going to trade candlesticks, whether you're going to trade pivots, whether you're going to trade Elliott Wave. Well, by the way, Elliott Wave, 23.6 pullback, almost to the tick. So shorter wave forward. Remember, wave 4 usually is a 38.2, but definitely possible. And, with the idea that the pivot's there and you've got this demand structure here, well, makes sense to get a bounce out of there instead. Reversal out of there. But, it's 3 down, so ABC down. Now, my only thought on this is you can get an ABC down here and then an ABC up and then 5 more down. So it's still possible that you could have a flat correction printing here. But even if it is, you should be looking to go further up from right now anyway. And if that happens, I would look for an initial target either right below the swing low here and potentially down here toward the 38.2, which would be our normal wave 4 pullback. So, you know, again, you could see an A, B, C, followed by an A, B, C, followed by 1, 2, 3, 4, and either, you know, 5 here or 5 down here, and then you get to move up. So if you're going to be long, just be watching what's going on as you go through here. If you get 5 up around this top here, then that tells you 3 down, 5 up, you know, this is the bottom and you're heading up. But if by the time you're getting to the top here, you're only done 3, be cautious. It could be a flat correction playing out. Okay? Let me see here. So that's got that. Real quick here, let me jump on the NASDAQ here real quick. Let's see here. All right, so here we go. So I think we may topped out here at 61.8. It's possible, definitely not guaranteed. I've got 1 down, and I've got an A and a B and a C here as a flat. 1, 2, 3, 4, 5 gives us 1, 2. Or you can look at maybe 1, 2, 3, 4, 5. If you think this is the top, it has to be a 1, 2, 3, 4, 5. But otherwise, again, it could be a 1, 2, 3, 4, and then you get a little bit 5 up here toward, you know, this 78, potentially this 78 kind of area, which fills in this gap over here on May 21st. But right now, that's what we're kind of looking at. You want to see a breakdown through the pivot. You want to get a breakdown through this 1 hour, 4 hour pivot here to really kind of say, you know, the first clue at the top may be in, but you need a breakdown below wave B here at 13,072 to say, okay, yeah, it's probably in and we're heading lower here. 1, 2, 3 coming down. So yeah, that's what we got there. Real quick here, take a look at TRX Bitcoin. Let's see here. I can't even type. It's mechanical keyboard. Let's see. Yeah, that's fun. Let me see here. Let me zoom out a bit more. Look at almost back down the all-time low. Where would we hit a low there at 72? All-time low being down around 17. Right over here. These were good times, right? Those of you that traded it back then. I mean, if I look at this right here, I go A, B, 1, 2, 3, 4, 5. I mean, if I look at that right there on the monthly, that's my first thought. Can I zoom out here a bit? Yeah, ABC down, or 5 down, 3 up. 1, 2, 3, 4, 5. ABC. 3, 4, 5. ABC. 1, 2, 3, 4, 5. Yeah, I think that looks like we've got a 1 up and a 2 on the back here. So if we zoom in, let's see here. Albert, I appreciate you, buddy. Thank you for saying so, man. So we've got 1, 2. I'm going to zoom in here a bit more. 1, 2, 3, 4, 5. So 1, 2, 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. A, B, C we're working on here. Yeah, so I think we got one. It looks like we might have one up. And this pullback might be 2. If so, at least on the daily here, I mean, we've got A, we've got B, and then maybe a 1, 2, 3, 4, 5 to come down. We may see it come on down here toward this 158, 150 level, kind of hit this structure right here, this demand structure right here, which is right there around the S1 pivot. And again, right around the 61.8, 65 kind of area. Let me zoom in a bit more here. I'm trying to see if we can maybe get like an ABC and an ABC and then a 1, 2, 3, 4, 5 done here. All right, so two possibilities here. One ends here or one ends here. If it ends here, we've got ABC down, ABC up, and then 1, 2, 3, 4, 5, probably done. If it ends here, then we've got A, B, and we've got a 1, 2, working on a 3 and a 4, and we've got a 5 still to go. In this latter scenario here, 5 cannot be, well, let's see here. Let's see, wave 3 is there. Yeah, your wave 1 is larger than wave 3, as you can see. So if this is going to be the top of this move, price would have to reverse around 155. So 158 is your 61.8 there. So that could possibly be, you know, again, A, B, 1, 2, 3, 4, 5. So what would I be looking for here? Well, what I'd be looking for here right now is a breakout above this swing up here at 220, or a bounce, potentially a bounce a little bit lower here, maybe as low as 158, and then the move up. And in that case, my first thing I'm going to look for is a breakout above this swing high. Whoops. Right here at 205. So I think we either continue up through here, and if we do, then that says that this is probably 1 here and it's a flat. So ABC down, ABC up, 1, 2, 3, 4, 5. If we get up here and, you know, before we get above here, if we break down and head lower here, in that case, it looks like it's potentially an A and a B, and then 1, 2, 3, 4, 5 as an ending diagonal there. You've got demand, you've got liquidity all right here, guys. From the top of this wick here at 167 to the low of this wick down here at 140. This is all liquidity. It's fresh liquidity. It's never been touched. So price is likely to hit the top of that area there. You know, maybe 160 to 165 or so, and get the reversal out of that if it gets down there. But yeah, that's the way I'm looking at that. So yeah. Let's see here. Man, it's after 1 o'clock, guys. I'm gonna have to get out of here. Yeah, so that's what I'm looking at there, guys. Hopefully I've given you enough information to work with, not just with this particular charts, but also just within trading in general. You know, again, I figure that if you're here, you're serious to some extent. So I'm going to do what I can to help you learn, but it's up to you to kind of decide that you're going to take that information and run with it. Okay? Nobody can do the work for you guys. As I continue to tell you, you know, I can lead a horse to water, but I can't make them drink, right? That's what you get for being in Texas. That's the kind of stuff you say. We say some other stuff that might kind of make you really raise your eyebrows, but there you go. So anyway, guys, hey, listen, man, I really appreciate you guys showing up as always. We'll be back Tuesday. No, we're going to be back Friday. We are going to be back Friday. I'm going to do Friday. So 11 a.m. Central Standard Time. Show up there. But I'm telling you right now, guys, this is just so little of what I teach. So if you'd like to join us, I mean, I think you'd be hard-pressed to argue that it wouldn't be the best money that you'd spend jumping in at least Tier 2, if not Tier 3. Tier 3 definitely just... somebody once put it, it's like drinking from a fire hose. But, just be sure you're ready to devote the time to it, guys. The information's there. We're there to help you and whatever along the way, but, unless you actually get in there and do it, it'll just be a waste. All right? So we'd love to have you there. But remember, everything we talk about on the charts and everything, at the end of the day, it's all secondary. The only thing that matters, the only thing that you control at the end of the day is how much you lose. You make your money with your risk management day in and day out, guys, all right? So I hope you guys have a great week. Hopefully maybe we'll see some of you new guys over in Discord. We'd love to see you there. Be sure you say hello if you do. And other than that, just trade safe out there. Be kind. Be kind, guys. You never know what the other person is going through. You have a choice of how you act and how you are in your life. You can choose to be cordial or you can choose to be, a jerk. It takes a lot more effort to be a jerk. So the fact that you actually get to choose how you can be says a lot about how you act. Don't ever forget that. Because everybody else there is going to, and rightfully so, judge you by the way that you treat how you treat other people. So be a kind voice in the world. Be a kind person in this world, man. Again, if my story of what's going on with my family and, my sister and my brother-in-law right now isn't hitting home, I think you need to sit back and really kind of reevaluate what's going on in your life and how you view things. Because it might be her that you see on the street. She might need that kind word. All right? You guys have a great day. Thanks so much for being a part of what we do here. And we'll look forward to seeing you, hopefully in Discord, but if not, again, on Friday. All right? 11 a.m. Central Standard Time. You guys have a great day. Take care.